It is a common dream. You have worked hard for 15 years. You have optimized your savings, avoided bad debt, and built a substantial cash reserve in your bank account. You feel secure. You have won the first round of the financial game. But then, as you approach 2026, you begin to notice a quiet, disturbing trend. The prices of the things you actually want, a family home, a quiet piece of land, an ownership stake in a stable logistics business, are moving further and further away. While your saved cash remains exactly the same on your screen, it is buying less and less in the real world. You are experiencing the first symptoms of the 2026 wealth gap. Most people will be caught completely off guard by this new economic paradigm. They will believe that saving is enough, but you are about to learn that saving is no longer safe. Today, we are going to deconstruct exactly why assets are destined to rise, while cash is biologically designed to melt. We will provide you with the exact calculated engineering blueprint that high-net-worth individuals are using right now to not just survive this recalibration, but to multiply their wealth. To master the 2026 wealth gap, you must first understand the fundamental illusion of money. Most people confuse currency with wealth. Think of currency as a carrier wave for your life's energy. It is supposed to hold the charge of the work you did yesterday until you need to spend it tomorrow. But the global financial architecture is designed to expand the supply of these waves faster than the supply of things you want to buy. This is not a conspiracy. It is a feature of current monetary policy. In the context of the 2026 recalibration, this monetary expansion has reached a critical tipping point. Central banks are forced to choose: save the system by printing or let it collapse by stopping. When you hold cash, you are holding a promise that is being diluted every single month. Your currency is melting. Now, we must understand why assets, real productive assets, react differently. They don't just rise, they simply react to the devaluation of cash. When you buy a prime piece of real estate or an ownership stake in a well-run logistics company, you aren't just betting on appreciation. You are acquiring things that are scarce, utilized, and cash flowing. These are the three fundamental pillars of high net worth architecture. Assets like these act as a hedge because their value is tied to intrinsic human needs: shelter, moving goods, rather than a central bank's promises. This is the wealth gap in action. The high net worth individual, already optimized for asset ownership, is automatically insulated from the currency melt, while the salary saver is left completely exposed. But 2026 introduces a new variable: the simultaneous collision of three global crises. Devaluation is not happening in a vacuum. This conflict in Europe, the shadow you can see on the global stage, is not just about territory, it is about resources and logistics. This makes things that store and move physical goods, things like logistics fleets, warehousing, and strategic ports, more valuable than ever. High CPM advertisers like maritime insurance and B2B logistics SaaS are built on this reality. We must not fear these crises. We must engineer solutions to them. The 2026 wealth gap is simply a recalibration. The high net worth individual does not wait for predictions. They build structures that survive any forecast. Your portfolio must become an architectural project. The psychological shift you must make is to stop trading your life's energy for currency and start trading it for time. Real freedom, the definition of the exit strategy, is having your assets generate enough cash flow to support your desired lifestyle without requiring your active labor. It takes ruthless discipline to remain oriented toward the exit ramp while your cash balance continues to grow but purchase less. This is the boring middle of finance. But you must remember, the asset value on your spreadsheet is not the measurement of success. Successful asset architecture is measured in free Tuesdays. You are building a lighthouse. The Great Devaluation and the 2026 recalibration are the fog, but the structure you build ensures you do not get lost. The system is recalibrating, and it will not wait for you. But the 2026 wealth gap does not have to be your ending. By shifting your perspective from consumer to owner, you are not just saving money, you are claiming a piece of the productive world before the melt accelerates. The blueprint is simple, but execution requires something rare: long-term engineering in a short-term world. The question isn't whether it's possible. The question is, are you ready to start drawing your exit ramp? The technical specifications are complex, but the opportunity is immense. High CPM advertisers are built on this reality. The journey of maturity is moving from consumer to architect. Start drawing. If this analysis provided value to your own architecture, consider subscribing to our community of architects. Click to continue your build. Start your exit today.